Okay, everybody, it's time for another weekly wrap, and you probably noticed that I've got my charts in a much different format. That's because I got a question early this morning from a member, and he asked on my pound-yen charts on that last leg down from 234.80 to current prices 233.07. I see four massive spikes on my 10-minute chart especially. Would that be a clue to buyers coming back into the trade at these levels? Obviously massive institutions. I have not really seen four spikes like that consecutively on a chart before, and more so because it is the pound yen. Now, part of his question has to do with the carry trade. And if this doesn't go too long, I'll tack on some of the ins and outs of the carry trade at the end of this. But if this starts getting pretty long, what I'll do is just hold off on the carry trade information for a later date. So let's talk about what I really think is the guts of his question. And his question basically is, how can I tell, number one, that it's likely that institutions are coming into the market, and number two, is there a pattern that I can see on the chart? Well, I really believe that there is, and I've got a 4 CD set on this, so believe me, this is not a comprehensive overview by any stretch of the imagination. What I am going to try and get across are some of the basic concepts. Because remember, we need to understand concepts in the marketplace. We need to have theory, a little bit of theory, but we need to also have some application. So I'm going to deal with some of the concepts first, and then I'll start to get into the actual application of it. Now you notice I have three charts on my screen. I've got the daily over here, the weekly, and then the 60-minute. Why am I looking at multiple time frames? Well, normally I'm not going to be staring at the weekly. It just doesn't change often enough for me to look at. I'll look at it literally once a week, usually on a Friday or a Monday, to orient myself for where I think the market can go. Every once in a while, I'll also take a look at the monthly. Again, the monthly isn't going to move a whole lot, so I just need to look at that usually a couple times a month, if that. So, I guess maybe 2-3 times a month would be fair. But definitely I'm looking at the daily and I'm looking at the hourly. Now, those of you who are used to looking at, a 5-minute bar or something like that, I'm hopefully going to start to introduce you to the fact that you really don't need to stare at a chart that's moving like that. You're going to have, look, if price is either going to get to the target or it's not. It's either going to stop you out or it's not. Do you really need to sit in front of a 5-minute chart all day watching price to, I don't know. In fact, I even told my wife the other day I need to go back in there and watch one of my positions. And I sat down at my desk and I said, what am I watching for? It's either going to hit my stop or it's going to hit my target. So anyway, by focusing on the multiple time frames, it helps to keep you oriented to what has been going on. And it's important that you get into an understanding of how the market flows from one area to the next. So here on the weekly, okay, as if we were pretending that this was Friday, this is actually way back in December. If we were looking at a Friday, we didn't know that this week had formed yet, and we couldn't see any of this information or this information, and we were just looking at our weekly bar. What we would be able to tell is that the market had definitely sold off. How do I know that? Well, let me give you a little bit of conceptual information here. For those of you who don't have any financial training, you've never taken a course in finance or economics, this may be new information to you. There's a little thing in the world called supply and demand. These are immutable laws of almost nature, okay? It really is that serious. Supply and demand absolutely rules the market. I don't care what system you're trading. I don't care what indicator you have. I don't care if you've been in the markets for 50 years and your indicator is telling you that the market should go up. If there's more supply than there is demand, the market has to go down. It absolutely has to. I guarantee you That's the one guarantee in the marketplace. The one guarantee is if there is more supply than there is demand,